An average morning in India might look like this. You make up and check your messages using a Jio mobile network. On your way to work, you stop to fill up your car at a Jio BP gas station. Later, you order your weekly groceries through JioMart. Throughout the day, nearly every transaction, connection, and consumption habit flows through the infrastructure of a single company, Reliance Industries. This chart illustrates the financial footprint of that omnipresence. Last year, Reliance became the first Indian corporation to generate over 10 lakh crore rupees in annual revenue. To put that into perspective, that single-year revenue is larger than the total gross domestic product of several small nations. It is effectively a proxy for the entire Indian economy. Corporate monoliths of this scale rarely form by inventing entirely new industries out of thin air. Instead, they grow by identifying a single vital supply chain and methodically conquering every single link within it. In 1957, Reliance was virtually unrecognizable from the tech and energy giant it is today. Founded by Dhirubhai and Ambani, it started as a modest trading desk operating in the commodity markets of Mumbai, buying and selling spices and polyester yarn. Ambani had massive ambitions for expansion, and to fund them, he bypassed traditional banking institutions. In 1977, he took the company public. That initial public offering allowed millions of ordinary citizens to invest directly in the firm, forging a financial contract with the Indian public that secured the capital needed for what came next. The strategy driving that expansion is known as backward integration. When a business relies on outside suppliers for its raw materials, it remains vulnerable to price spikes and shortages. Backward integration solves this by having the company move backwards up its own supply chain to manufacture those raw materials itself. By applying this philosophy, an operation that started by simply trading yarn eventually realized it had to weave the fabric, spin the threads, and ultimately create the chemicals that made the threads. The obsession with eliminating dependency on outside suppliers turned a small trading outfit into an industrial powerhouse. The physical climb down that supply chain started in earnest in 1966. Reliance opened its first textile mill in Naroda, Gujarat, to manufacture synthetic fabrics directly. They were successful, but they quickly realized they were entirely at the mercy of the companies supplying them with polyester fiber. To fix that vulnerability, they took their first massive step backward in the early 1980s. They constructed the massive Patel Ganga facility to manufacture their own polyester filament yarn and the chemical precursors needed to make it. But chemical precursors require purified petrochemicals, and petrochemicals require refined crude oil. Every time they solved one supply chain bottleneck, they exposed a much larger, more expensive dependency further down the line. This forced Reliance to enter the global energy market. In 2000, they commissioned the Jamnagar refinery complex, completing construction in a staggering 36 months. Today, it operates with a Nelson Complexity Index of 21.1, a technical metric meaning it is uniquely capable of taking the cheapest, heaviest crude oils and refining them into high-value chemicals. The sheer speed and scale of the Jamnagar project proved out a specific competitive advantage. Reliance demonstrated an institutional ability to execute highly complex, capital-intensive engineering projects faster than the global industry average. In their attempt to secure the raw materials needed to make clothing, they had systematically built the world's largest integrated refining and polyester engine. In the mid-2000s, Mukesh Ambani took control of this massive industrial base. He began using the enormous cash flow generated by the heavy refining business to fund an entirely new direction, capturing the daily spending of the Indian consumer. They applied their engineering execution skills to logistics, rolling out Reliance Retail. Today, that operation covers over 19,000 physical stores across 7,000 towns. Those storefronts now double as hyper-local fulfillment hubs for digital orders, which sharply cuts down delivery times and costs. Then, operating on the premise that data would be the most valuable commodity of the 21st century, they spent billions building a nationwide telecommunications network from scratch. The launch of Reliance Jio in 2016 offered ultra-cheap data, onboarding hundreds of millions of users to the mobile internet and consolidating the telecom sector around their infrastructure. This creates a commercial stack. The base pipe is the Jio network. Above that is the product layer, Reliance Retail. The final layer is the program, An $8.5 billion merger with Disney forms JioStar, securing a near monopoly on premium Indian broadcast rights like cricket. This massive digital ecosystem is exactly the same strategy they used for oil and textiles, simply applied to human attention. They own the network pipe, the retail interface, and the media content flowing through it. But the core engine generating the cash for this structure faces a permanent threat. The traditional fossil fuel market has a global expiration date. To survive the energy transition, Reliance has pledged to reach net carbon zero by 2035. They are backing this with a 75,000 crore rupee investment to construct the Dhirubhai Ambani Green Energy Gigacomplex, a 5,000-acre manufacturing hub in Jamnagar. Look at this diagram detailing their manufacturing strategy. It maps out a continuous path from raw silica quartz all the way to a finished solar photovoltaic module. They are building out the capacity to produce solar panels, battery storage, and green hydrogen entirely in-house. To manage this vast decentralized operation, the governance structure is transitioning to a new generation. Isha, Akash, and Anant Ambani have each taken directorships over the retail, digital, and new energy pillars respectively, preparing the empire for the coming decades. From its origins in textile trading to its future in green hydrogen, the company's expansion follows a single repeating blueprint. By capturing every link in every chain they touch, Reliance has built an integrated architecture that functions as the foundational infrastructure for modern India